SUV momentum, right? Because that's the charm about M&M right now, if I can put it that way. Your revenue share of 25.7%, how durable and sustainable is this kind of momentum?
So we've actually grown this very significantly in the last few years. And our goal is to continue that growth path. We are getting into newer segments in SUVs, as we've talked about with the new launch of our Vision platform. And I would expect us to continue growing that number.
Not beat?
I continue growing that number. So not
growing the number.
Not just stay where we are.
Okay, great.
I would want us to continue competing and doing a lot better in the marketplace than we are today already.
Great to hear that. But what protects pricing power, right? Because I'm sure that's that one tangible which the consumer is very sensitive to.
Yes, pricing power is based on the quality of product we deliver to the customers. And the reason we have grown market share so much is because of the quality of product, and that has been just some outstanding work that our team has done to be able to deliver something that consumers would often look at and say, we are comparing this with vehicles that are much higher in price, and we still find Mahindra to stand tall amongst those vehicles. And therefore, we're not too worried about pricing power. I think it's about delivering high quality products, and the rest follows.
Well, I'll tell you why I ask this, because you also see immense and fierce amount of competition in the segment and discounts are rising. Is that a worry at all?
In the last 5 years, no one has asked me, give me a good price on the vehicle. I have never been asked a question on price from anyone I know. The question always has been, can I get the delivery
quicker?
And that again is a testament to what our team has done. And this is despite having increased capacity almost 4 times in the last 4 or 5 years. So that's what we would expect to continue doing as we go forward.
I want to talk about the e-SUV segment firstly, and the penetration, from what I understand, has reached almost 8.7%, right? You're at 30,000 units now retailed. What's the roadmap to get this number to, say, 15 to 20%?
It is a roadmap that we have outlined, and we feel that we will get there. We've got a very good portfolio of products coming up in electric, and this is just the start. So we are on track in terms of where we want it to be. We ideally want to get to 30%, not even 15 to 20%. And that will happen, it's in the next 3 to 5 years, not beyond that.
But how quick do you think the adoption of EVs can be, or the switch, beyond the urban centers?
Now the key factor is the charging infrastructure.
Yeah, exactly.
Earlier it was, do we like the product? Range anxiety, is the pricing reasonably at par with ICE? All of those things have been addressed. And charging infrastructure is coming up very rapidly. It will still take some time. But as that comes up, it becomes much easier for someone to take electric, because charging today can be done very quickly. Our vehicles can be charged in 20 minutes to get to 80%, which is literally a 400-kilometer charge in 20 minutes. If you can charge 100 kilometers in 5 minutes, you don't need to worry about anything after that. Right?
Absolutely. But you know, with all the tech involvement, or rather evolvement, and with all that's happening in the world, also comes the whole EV supply chain security question. How do you mitigate risks or ensure the supply chain remains intact because of the entire rare earth magnets issue with China?
This is an issue for both ICE and electric.
Yeah.
So not just
I'm
EV.
talking about the industry.
And what we learn is every crisis ends up with an opportunity to do something better. The semiconductor crisis has taught us a lot in terms of how to respond quickly to everything else that happens, how to change parts out, have options in play that we can exercise quickly. And that has helped us get through the rare earth crisis and the recent Nexperia crisis as well. So at this point, we feel reasonably good about being able to handle supply chain shocks. For the longer term, we need to have lower dependence on any country in the world for certain critical aspects that are required in a supply chain. And that is something that we are working with the government on for rare earths in particular. And we feel that we will have reasonable solutions that can help us protect from those shocks. But in any case, in the world that exists today, we have to be agile and ready for shocks that we haven't expected before, and be able to address them.
So 2 questions, and firstly, in the interim, is the rare earth issue, or rather, have you found a solution to the rare earth issue?
Yes. So at this point, that issue is behind us.
Taken care of.
And for the longer term, we will need to ensure that India is self-sufficient in a few areas. And my sense is that's also well underway.
That will take some time, won't it?
That will likely take 3 to 5 years, but...
and you're good to go till then?
And we're good at this point.
The other thing, since you did talk about this fast-changing world and how everyone has to be agile, what's the worst that could happen? I'm sure you have a war room here at M&M, right, who's trying to work on perhaps what could be the worst, or what could be the next problem that could come at your desk. What could it be?
At one point in time, we would do a lot of work on scenario analysis and say, here are all the things that can happen. In today's world, there are multiple scenarios that happen regularly that you can never imagine would happen. So what we've gotten a lot better at is having our teams continue scanning the world for what is happening. If something happens, act very quickly and be able to...
What are they acting on right now?
Right now it has been an Xperia crisis, right? Because you've got suddenly a large number of semiconductors out of play. This is different from the semiconductor crisis because those were high-value semiconductors that were tougher to replace. Many of these are commodity products. Many are 20 cents worth. And therefore, in theory, should be easier to replace, but the volume is very high. And therefore, we need to be able to find the right sources and be able to get them into the products. Many of our suppliers had to actually spend a lot of time trying to figure out which ones went into which product as well. So some of those things will happen, and that's where we have to be agile to be able to address those. And I feel very good about where our team is in being able to do that for various things that may come up.
Okay, let's talk about the bread and butter business, and let's talk about the numbers. The auto EBIT margins, they've also improved very drastically, right, to 10.3%. Can this expand further as e-SUVs and SUVs gain larger and larger a share in the market piece?
Yes, so first to clarify, 10.3 is for ICE only, not for SUV.
Yes.
SUV is something that or not for electric. We report electric SUVs separately. And our goal is to continue to develop products with a lower cost and therefore enhance the margins. But what we will also see, as we've explained often, is any new product is something we will launch with lower margins to start with. As it stabilizes, the margin goes up. So today we've got a good portfolio of products, and newer products will be a reasonable part, but not a very large part. Therefore, we see the margin being reasonably stable over time. Can it grow? As a leader, yes, I would say that it's something we will continue to push our teams to grow that. But in terms of where it is vis-a-vis the industry, we are very well placed.
But won't then upcoming launches also dilute margins?
Yes, but that's happened every time. And that's where our existing products will continue to grow the margins. The upcoming products will dilute them. You may see certain mix impact at certain point in time, but on balance, it's moving in the direction that we planned.
Coming to tractors then, tell me more about what's happening there. You know, as the industry now is, or rather industry growth, as you highlighted, is at double digits, what are the demand triggers? What could the scale be like, say, in the next 1 year?
So, Aisha, I'm going to first just take a step back and highlight the one part of results that I looked at and said, this is just truly amazing, which is all our businesses, as you started with, are firing on all cylinders or all engines, in your words. And from that perspective, tractor is leading the way with the 54% profit growth year over year for the same quarter. Mahindra Finance at 45%, Tech M at 35%, Growth Gems at 22%, and Auto impacted in the short run by the transition that we saw, which is catching up at 14%. So that's the kind of growth rates that we're seeing across businesses to result in the overall 28% growth, excluding the one-offs. And therefore, tractor has been a story of very, very strong execution on the ground. The 54% is without one-offs. Yes, there is some benefit because of the way the festival seasons have worked. But it's a 50 basis point increase in market share. It's an increase in margins. And that's really resulted in this outcome. The industry has been very strong as well. And that's also been a significant factor. So that goes back to sort of the overall strength of the economy and what we see. Rural continues to be very strong. Urban's picking up very well.
In this changing environment in the world and the kind of pace at which it's changing, how do you think TechM per se is going to evolve to the changing needs of the world with now the emergence and innovation and the pace at which AI is innovating and how it's sort of impacting the whole industry?
TechM and the industry has changed multiple times. There have been multiple transformations, right from when we talked about Y2K and the industry is going to be dead after Y2K. So this is essentially part of technology. And TechM has been one of the leaders in AI with an LLM that we've created for India, Indus, with Orion that's been launched recently. And we're working with a large number of customers. The advantage for TechM also is that a number of Mahindra businesses are very quick to adopt AI. And that's something that we take into our customers also. So we feel TechM is very well positioned, and it's a transition that we're used to, and it's part of what we need to do.
So no new listings from the Mahindra stable?
At this point, we're not even thinking of listings because there's such a lot of work to be done from an operational standpoint. We don't need the capital. We don't need to monetize. And therefore, we're just focusing on operational growth. And as we do that, these things will happen in the future.
So like you said, it's not about the percentage, it's about the growth multiples. Which of your businesses do you see firing on all engines, awesomely, like you describe it, say in the next 5 years?
So at this point, I would say, I can safely say every single one.
So M&M 5,000 rupees per share in the next 12 months?
My job is to keep our head down, deliver what we have to.
I'm just trying to do the math.
And then leave it to investors.
What multiple would the market give
to decide. The key is to have investors recognize the value that our growth gems are creating. And while it is easier to see value in listed entities, and which is where we may need to list them in future, we have significant value unlocks in our growth gems.
10,000 then on M&M.
My job is to focus on delivering results. The rest is left to the market.